This podcast is intended and contains general information on financial strategies, investments, and products only. Whilst Luke and I are both licensed financial advisors, we don't know your personal circumstances, goals, or objectives. We highly recommend that you reach out to your financial advisor or investment professional to discuss any of the topics that we've covered today before taking any action. Our full disclosure, copies of our financial services guide, and additional information about Seneca Financial Solutions and Bold Wealth can be found in the show notes.
Hello and welcome to another episode of Wealth and Toil. My name's Luke Laretive and I'm here today with the man, the mystery, the Mayor of Hobart, Dylan Pargiter-Green. How are you, mate?
Mayor of Hobart, I love it. I love it. Get me in there. Happy days. Mate, I'm good. It's start to another week. The sun's out. I think I wore shorts all weekend, which is
you're a Tasmanian. You wear shorts in the middle of winter, and so I don't know what you're making a big deal.
Yeah,
about
but
that.
like there was weather to justify shorts all weekend, right? So I wasn't getting odd stares from those people walking past me in their Tassie tuxedo, the Kathmandu puffer jacket, yeah. No, it's good. Beautiful weekend down here, mate. Really, really good.
Yes, very nice stuff. Very nice stuff.
How was your time in Torquay?
Yeah, it was good. I was actually on the other peninsula. Went over and saw some friends
On the bay side.
Saturday night on the fancy side, with all the rich white people over there. So that was nice. And had a good had a nice time with them. But just went over late Saturday, came back sort of midday Sunday. So quick little hit, and then just quiet weekend otherwise. I've got actually busy little 6 weeks, I'm going to call it, in the calendar at the moment. So, but I've got to put my head down and bum up. I'm being a bit lazy at the moment. I'm just sort of not really motivated. So we'll try and fix that.
You've got that post-holiday blues, mate.
Maybe some of that, or maybe just general, malaise. So but no, we'll keep plugging away.
Mate, you'll get back around. I know you too well.
Yeah.
There's a big thing happening in one side of the world at the moment, and people tend to think that it has fairly significant impacts on the rest of the world. And that, that's something that I think we're going to talk about today. A little vote that might be happening in a country not too far, or very far across the other side of the world.
Yeah, so we're gonna do US election. Which always just gives me a shiver down my spine. I'm not really a political animal. I leave that stuff to wiser minds. But we're going to cover off some of the stuff, I suppose, the key policy differences between the two, and more so from an impact on the markets and on, I suppose, the outlook. I think that the takeaway here is, if you want to finish up the episode within the first 5 minutes, takeaway here is the markets generally move on from this stuff pretty quickly. Whilst they can react in the short term, we kind of move on pretty quickly. I think the policies that are set out at the moment are relatively neutral for most sectors, but there are some interesting things, and we're going to try and cover off those today. Dill, so I might start, given this is your suggestion to do this topic. I'm going to throw you right under the bus, like directly under the front wheels. Talk to me a little bit about, I suppose, the tariffs. Trump's tariffs proposal is probably the main policy difference. He sort of sees it, obviously, as a protectionist mechanism for America to protect jobs and, get rid of all of these illegal foreign workers that he's upset about. How are you sort of seeing that actually, if that does come to pass, Trump does get in and the tariffs do come in, which I don't know what's going to happen. But let's play the game that it does. How do you think that actually plays out for the US economy, and particularly from my perspective, what's important is inflation.
Yeah. Okay. So the big swinging axe for Trump, and the one that he likes to portray when it comes to financial outcomes, is tariffs, right? He wants to be the big bully in the room when it comes to global trade, and the way you do that is by imposing penalties on other countries, and the reason being that that stops other countries benefiting from US consumption by as much. There's a big rhetoric in that Trump's tariff stance is going to be so significant that it'll have really, really fundamental change. But my read on it is that Harris is actually more likely to just continue the existing imposed tariffs on China. Primarily, that's what we're talking about when we're looking at tariffing other countries. And so, whilst Trump's will be stronger, there's probably not as significant impact to what people would expect. The policies themselves are actually relatively similar. We went through a period of Trump's last presidency where the tariffs were quite strong. We reduced them a little bit, but the relationship with China since then still hasn't been that productive. We obviously had COVID throughout that time as well, so there was a lot of challenges. And I think now what we're seeing is Harris is just going to continue the status quo, continue what Biden and her government have done over that time. Trump's going to come in the short term. Immediate higher tariffs in the way that Trump wants to do it probably creates a little bit of instability. Markets don't like volatility, and it might weigh on some of the larger global S&P based stocks, the ones that do export and globally trade outside of the US specifically. But I think by and large, it's unlikely to have a significant impact on the market. That's my read on it.
I think, drilling down a layer lower, I think about individual companies and I think about, labor force dynamics. And there are a lot of businesses, directly or indirectly in the US, benefiting from the increase in labor supply that migrants, legal and illegal, are providing. So, if let's say there's 100 workers and they're all fully employed, if we add 200 workers into the system, well, we're not going to put upward pressure on wages. We're going to put downward pressure on wages in a vacuum. And by the same token, if we take 50 out, well, we're going to put upward pressure on wages. So I actually see some of the Trump policies as kind of inflationary, and I think the tariffs as well. All you're doing is adding to the cost of manufacturing. If China could produce good A for $100, and the US produces it for 105, well, I can guarantee you the corporation who sells it is not going to be wearing the $5 difference. No. They're just going to be passing that on to the consumer. So again, I sort of see it as inflationary, and I don't know if that's how it really plays out. I mean, I'm not going to be modeling, doing the economic modeling. It's well above my pay grade, but certainly my gut feel for it is that it's actually inflationary. I think on the Harris side, from what I've read and sort of seen, I think she's really focused on the tech sector, both from an employment perspective in terms of, protecting casual workers and protecting people from sort of exploitation, essentially, and also from a general public's perspective of, regulating, big tech, which I think is well and truly, overdue. So, there could be some risk for some names across the technology sector. But I mean, if history is anything to go by, a lot of these policies end up being watered down, as you kind of pointed out, Dill, and don't actually come in quite as strong as maybe the headlines read. So I would be definitely not trying to get preemptive here from a fund manager perspective. And I don't manage, direct US equities anymore, but certainly if I'm thinking about if I put my fund manager hat on for a minute, I'm not jumping at shadows here. I'm certainly not trading around it. And say I was running a hedge fund style strategy, I'd be betting on reduced volatility than expected. I think the market's probably pricing in more volatility than maybe will come to pass.
Well, that's pretty standard though. Like markets in an election year are usually in the time leading up to and immediately post an election, in like the between presidencies, or even in Australia, like leading up to an Australian elections, markets are just generally a little bit more volatile. Markets don't like uncertainty.
Correct. And even though, I suppose, yeah, like you're right. I think it's a really good framework to take away from today for anyone who's listening. And if you're managing your own portfolio or, thinking about investing kind of more broadly, markets move generally from uncertainty to, like, if you can move, if your stock is moving from uncertainty to certainty, generally the share price is going to go up. If the markets are pricing in uncertainty and that uncertainty disappears, often positive or negative, doesn't matter, but just it goes from an unknown to a known, that can be a significant catalyst for re-rate. And I think we're kind of set up for that in the US now, where the market is pretty convinced that there's going to be no recession. It's gone from being a hard landing to a soft landing to now what they're sort of calling in the papers a no landing, which
staying in the air.
I can't.
Don't worry about refueling the economy. We're just going to fly forever.
Yeah, which to me just sounds like stealing more money from the young and working, and handing it over to the rich and old. But we'll deal with that on another day. But I think it is a very favourable environment for risk assets, and as much as we're nowhere near there in terms of when I look at the leading indicators and the data, and it's not as probably as good as the markets make it out to look, but there's just not really much going wrong. So that's kind of, I don't know, my sort of two bob on it anyway.
Yeah, I think another thing to think about is like tax cuts to corporations. So, historically, tax cuts to corporations, and in most cases, that's a positive thing for markets. That's one of Trump's policies. And I think that's the other reason why markets have historically, or market pundits have historically viewed a Trump a Trump presidency, or even a Republican presidency, as a positive thing. But your point about inflation, I don't think that tax cuts right now would be anything other than inflationary in what is a no landing or very, very, very soft landing environment. I think that would
doesn't make much sense though, Dill, when you think about it, right? Like, okay, I'm just, like I said, everything I do, I just think about like lemonade stand level stuff, which isn't always right. It's oversimplification. But you and I run a lemonade stand and we get a tax cut. Well, we've got more profits. So you've got two choices. You can pay those profits out to shareholders, which more and more especially in the US, in an activist-led market, that's what they're going to ask for. They're going to ask for buybacks, right? With that money. So that's only going to further drive a wedge between those who are shareholders and those who aren't, or those who are, asset owners and older, and the people who are younger, again, and just create more inequality, which I don't necessarily think is the way to go. Or those companies are going to go in and they're going to reinvest those profits. But I don't see in a declining, a slowing growth environment, this no landing environment where growth's now slowing, still positive, but slowing, and slowing quite quickly, as having a lot of companies having a lot of opportunities to do that well. So I think there's going to be a lot of pressure to return any excess profits to shareholders. And as a result, I just don't really see how that sort of policy does anyone any favors, or does the economy any favors. I would think the best policy that I've seen, and I think that the thing that can benefit Australia the most, is if Harris gets in and goes hard on clean energy and green energy. So I think that is, from an ASX perspective, that is where there is potential upside. I mean, the Inflation Reduction Act under the current / previous Biden administration has been, a significant driver of value for a number of companies on the ASX. And I think that further policy like that, further policy that's supportive of green industry, further policy that's supportive of electrification, is only going to drive, more demand for the things that we do here in Australia, and we do well here in Australia. So I think if I was to sort of put my finger on the best policy for us, I would think that sort of the Harris tilt towards renewables is probably right in our wheelhouse.
Yeah, well, I mean, that's one area where the policies actually do differ quite a lot between them. Like, a lot of them are, I'm going to do this, and the other one says I'm going to do it stronger. And some, Harris is stronger on some, Trump's stronger on some. A lot of them are actually relatively similar, which is
great.
Quite unusual. in American politics. It's very usual in Australian politics, but that's not what this podcast episode's about. But Trump's got a much stronger priority on fossil fuels and existing LNG, increased oil and gas drilling domestically. There's a strong rhetoric around previous dependencies on the UAE and even Russia for some of the European countries that could be buying oil from America. So that would be something that would be a swing, I think, over the 4-year term. Harris, like you say, huge on the electrification of America, making clean energy, green energy a huge priority from an infrastructure side. So, I've been a big energy infrastructure investor with clients for probably the last 5 years since sort of toward the end of Trump's presidency. More recently, with high inflation, it's been a more challenging time, but I think that has a 30-year tailwind behind it. Particularly, even if we have a Trump term now, I think that future presidents are going to see it. And I think that what you said about how it benefits Australia, I mean, we were talking last week, we've got all the good stuff for making things electrical in the ground. So, there's a lot to be said about how Australia benefits from that.
I think the US is well positioned to take, if they want to take a lot of the downstream stuff from China and capture those margins. Benny and I were talking about lithium recently and Western Australian spodumene, particularly on the back of our trip up there. And I sort of made the point to Ben. I sort of said, well, spodumene's, I don't know, $1,500 a ton at 6%, and then lithium hydroxide that actually goes into a battery is roughly 10 times that amount, right? So $15,000 a ton. So there's only $1,500 worth of value getting it out of the ground, and then there's a little bit more value turning it into lithium chloride, and that's the price of that's sort of 20% of the total price, and then there's a big uplift to take it from lithium chloride to lithium hydroxide, and that's actually a specialty chemicals process, and it involves quite a lot of technology if you want to start talking about direct lithium extraction, which is where this Rio acquisition of Arcadium is kind of going to take the industry. And I think the US has a pretty nice advantage in a lot of that stuff and could do well with a pretty rich history in being experts in specialty chemicals when you talk about companies like Dow Chemical, say, for example. So I think there's a really strong opportunity for them there to be the value add producer and then get into batteries and get into EVs more in the US. I think, though, that does raise an interesting point, and we sort of talked about Rio and LTM merger last week or takeover last week, and the cartel-like nature of the lithium market that's going to evolve, in my view. I think that is why a fossil fuel-based expansion of the US oil production, gas production is a little bit naive, because you're really a swing producer in that market, and you're not going to compete. You're not going to be globally competitive with the Saudis and the Middle East, so who control that market, and you're not going to be competitive with Russia. They can always undercut you. They can produce it for next to nothing. So you're still at the mercy of these, two other, let's not call them enemies, but let's not call them friends either. They're not allies. That's for sure. I think it doesn't make a lot of sense to put yourself in a position, if you're the US, as a price taker, when you can be a price maker in another market, and obviously the environmental side of it as well. Now, we can debate that, and people can talk about that, but it's beyond the scope of this particular podcast. We're trying to just forget about that, just talk about the money. And I just think, from a financial strategy perspective, I'd much rather go down the green route, because I think you can actually become a price maker and take a dominant market position, a position that you will never achieve in fossil fuel.
Yeah, no, definitely. I think, there's so many economic factors outside of America's control, which is quite unusual in a lot of markets, in oil and oil production in particular. Russia's obviously thrown a spanner into their own works more recently. But yeah. So let's look, I think in summary, on the policy side of things, there's some relatively small differences across sort of, your fiscal strategies. Maybe immigration's another one, but we're probably not here to talk about too much into the specifics of those. What we would say, and what I would summarize on that, is that a lot of the policies that both candidates are putting forward are probably going to be positive for markets over the duration of their term. So no one's out there really worried at the moment about the sort of, the short.
The US election's not a swing factor. Worry about what the central banks are going to do and inflationary impacts. That's what matters for markets.
Yeah. So the other thing that, people say this to me all the time, right? Like I think it's a bit of a stereotype that Republican presidents have a more economic focus, and they're good for the economy and
stock market.
Better for the stock market and things. So we did a little bit of digging.
Dill did a bit of digging.
I did a bit of digging prior to this. So over the last 50 years, here's some examples. Bill Clinton's administrations averaged around 15% annual returns.
Democrat.
Barack Obama, S&P did nearly 14% per year.
Democrat.
And more recently, Biden, 2021 was obviously huge. 2022 was very much the other way. And 2023 and 24 have been pretty good years. So given that's not finished, we don't have an exact stat on that. But again, Democrat and
the US market's up a lot. Let's put it that way.
Year-end market's up a lot. That's right. So also over that same time period, we had Reagan. So 81 to 89, 10% annual returns, which pretty solid. Trump, S&P 500 was 14.5% up during Trump's presidency. And the one outlier, and why I wanted to bring this up, was George W. Bush. So during the period of 2001 to 2009, the S&P averaged nearly negative 4% per year.
But hold on. But let's just. I think this is giving people the impression that this is causal. This is causal.
Oh, that's exactly the point.
None of this matters. It doesn't matter. It doesn't matter. It's irrelevant.
So in all of the positive environments, right, barring perhaps Biden having had dealt with COVID, right? So take that one out. But in both Clinton and Obama's and Reagan and Trump's, you had factors that were largely economically positive around the globe by comparison to their predecessors. And people will look at George Bush and say he had it was a terrible time in markets and all those sorts of things, and that's a Republican. The reality is there was a war, which, rightly or wrongly, whatever you believe, it happened, and it cost a lot of money, and it's not a very good thing for financial markets.
They can be, but it's a story for another day. But I think
we then had something in 2008, end of 2007, start of 2008, called the global financial crisis.
Yeah, I
would argue that there was a little bit of under-regulation during that time, and for probably a long period prior.
A long time that continues to be a long time, but as well.
Yeah. Well, but it's not as though the presidency or the party through which the president is sort of aligned is what actually makes the difference there. So the point of raising that was there has been really positive periods for markets under both types of presidencies, and it actually doesn't really matter because we invest long term. It is not about having, picking the day and picking how much, how many votes are going to be delivered in Pennsylvania or Wisconsin, and then buying into the market on a specific day. It's about building a robust portfolio and making sure that you've got that through all the other potential negative economic impacts that happen throughout the year.
I just think it's such a simple principle. Like, market was an all-time high today, yesterday, whatever. I just put another chunk of money in the market because I had it. So, bit of money, loan money that I had out there came back, and I was like, okay, cool. I'll just whack it in the market. I did not even blink about putting it in or whatever. Whack it in the SMA, whack it in the small cap fund, and away we went. Like, I don't try and time the markets. I don't give a shit. Now, I put in a lot of money in the market at the worst possible time in 2021. And my returns are still impacted by the fact that I put the money in the market at that time. But I'm going to put money into the market that many times between now and when I need that money back. So, like, it'll average out. It'll work. I might get lucky one time in the future. I might, I
mean, you probably put money in the trough of 2022. Like, you probably did that.
Well, yeah. I mean, I've
not on purpose, but
I've made money lots of times over the journey. Like, it's not. I think that people get way too caught up in trying to figure out if now's the right time or if it's a safe time to put money into the markets. When in reality is you don't know. Nobody knows. Stop trying to solve problems that you can't actually solve, and understand the math of what you're doing. Is that 7 out of 10 days the market goes up. So, and it goes up a lot more than what it goes down by. And the reality is that there's lots of opportunities to invest all the time. The question is do you have the cojones to just do it and get on with it? I love the fact of the freedom of investing in something, investing my money, and then it's done. I don't have to think about it anymore. Like, I just move on to doing what I'm supposed to do, which is my job. And I'm not trying to worry about it. So, I just take the decision out of it, and just as you got it, it's available, invest it straight away, because chances are the math is going to work for you.
Absolutely. And I think one of the reasons that I wanted to do this episode is because we have this conversation a lot, and I really enjoy it. I enjoy US politics a lot more than I enjoy Australian politics. But it's a conversation. What actually happens in the markets over the long term, and that's why we invest. We invest long term. It's not determined by which person stands up there and puts his hand on the Bible and on the 20th of January. It doesn't matter. Right?
People ask me about politics all the time. I'm like, yeah, my politics is making money. You know what I mean? Like, that's my preferred party. Like, it's I don't give a shit. Like, I think they're both as irrational and stupid as each other most of the time. So, like, I just literally just want to make as much money for myself and my clients as I possibly can. Not in that order as well, just so everyone's clear. And then. But no, I think it's people do overplay it because it's easy to talk about, and it's a lot like a lot of other things in investing that I find that when I have a chat to people is they chat about the things that are easy and are out there in the ether that generally don't matter. The things that matter are the details. When you're making investments, it's the nitty gritty. It's the details. You got to do the work, and I think that. That's where the nuance is where all the money is, and you can't put the nuance on the front page of the AFR. It just doesn't work like that. So
it doesn't quite fit.
No, so that's fine. That's why we can make money. That's why we can make a living. It's because people are lazy. So we just won't be lazy, and we'll try and figure it out. But it is such an easy thing to talk about politics because everyone can have a view and everyone's opinion's kind of valid. But in the markets, it don't work like that, and it's just not that relevant.
It isn't. I mean,
and I think that's a good place to wrap on complete irrelevance. It sort of sums up our week. We're going to try and be pretty consistent for the rest of the year, and we're even thinking about banging out a few pre-recorded episodes for over the Christmas break to keep you all entertained. They might be short, they might be sweet. They might be a one-man show, a two-man show. I don't know what we're going to do yet.
Hey, look, and if one of the 11 people who listens to our
that's good growth from the 7 we had last week, 40%.
I got some other family members involved. If there's something we're doing well, if there's something we're doing that you listen to and you go, that's absolute rubbish, please let us know. And if there's something you want to hear about,
let Dylan know. My ego can't take it.
Luke at Seneca. No, let us know. Send us a message. I think you can get to us on Instagram and probably through Spotify and Apple and whatever. We'll get our wizards who manage that to check the inbox. And if there's anything you want to hear about, let us know, because we're always looking for good topics. And maybe there's a good opportunity for some of those Christmas episodes to be a few specific questions.
Yeah, maybe we'll do that. It's not a bad shout, deal. All right, mate. I must run. I've got to keep moving, but I appreciate your time and expertise on this illustrious topic of the US election.
Likewise, it is always a pleasure hearing how much you dislike talking about politics. So anytime. Have a good week, mate.
See you, mate. Bye.